By Monday, silver price will be back to last year's levels. We're heading into a painful stretch loaded with warning signs, and it's not inflation anymore. It's economic indicators, it's investor sentiment, it's a brewing liquidity squeeze that almost no one's watching. Check this out. If you're interested in silver, click that link in the description. Money Metals is holding this contest. They're giving away 20 American Silver Eagles. Every month they hold this contest. Last month's winner was Brett from California. Click that link I left down below. You should be the next winner on that list. Take home that silver. Now, look at this. On Monday, the U.S. leading economic index drops. And this report often moves before the markets even realize what's coming. Think of it like the economy's early warning radar. It blends data like manufacturing orders, data for stock movements, data for unemployment trends, and it shows us the forecast of what's ahead. Now, here's where it gets serious. Economists expect another decline. That would mark the 18th drop in the past 20 months. If that happens, Wall Street will read it as confirmation that the U.S. economy is slipping into a deeper slowdown. When that fear sets in, traders usually rush to cash, not metals. And silver can take a sharp hit before recovering later. This is exactly the kind of knee-jerk sell-off that can drag prices back to last year's levels. Here's what most people ignore, but it's often what confirms a turning point. Alongside the leading index, the government also releases the coincident and lagging indexes. These aren't forecasts, they're proof. They tell us if the economy is already rolling downhill. If the lagging data spikes, meaning debt, meaning inventories or late payments are climbing, that's a red flag for credit stress. It shows the slowdown isn't coming, it's already here. That realization tends to trigger panic selling across risk markets. It tends to pull down silver temporarily as liquidity drains. It's the kind of move that happens when the big players yank money out of commodities first because they need cash. The same day, we also have business outlook surveys. These reports measure how confident business owners feel about the next 6 months, and they're often the first to fall apart before a wider market correction. If we see a sudden drop in business confidence on Monday, it'll feed a domino effect, weaker hiring expectations, falling industrial demand, and another hit to metals like silver. Even more dangerous, this comes as the government shutdown drags on. So without clear data, traders are guessing. They're guessing, and that can send prices swinging wildly in both directions. So Monday morning, we could see silver drop low as big funds unload risk, not because silver's lost its long-term value, but because fear is setting in. Get your own silver. Click that link in the description. Thank you, Money Metals Exchange, for sponsoring this channel. This is a great contest. Every month they're giving away 20 Silver Eagles, 20 Eagles every month. Click that link, be the next winner on that list, take home that silver, and I'll see you on the next one.